mining equities can produce ridiculous returns, like incredible returns. There are stories, 10 baggers are not uncommon in a mining bull run if you get in fairly early and, manage to hold on.
One new gold stock making big headlines since its start last April, acquiring gold for $5 to $10 per ounce in the ground, which is dramatically lower than the $50 to $100 per ounce in the ground other companies have been paying. To learn more about what hard asset investors are calling a mineral bank, visit crushthestreet.com/investright.
Hello, everyone, and welcome into crushthestreet.com. I'm joined today again with a returning guest, Gwen Preston of resourcemaven.ca. She is the resource maven, and she specializes in mining and is a mining journalist. And Gwen has been on our show a couple times now, and she's brought some excellent insight regarding the resource sector, metals, and I'm happy to have her on again. Gwen, thanks for joining me.
Thank you very much for having me.
Gwen, I wanted to get your thoughts on what we're seeing with China. We know that China has a very big impact on the price of metals, and we're just seeing this flow from metals going from Western countries to Eastern countries, specifically China. And we are seeing, with the Shanghai Gold Exchange, they're going to be pricing the metals in yuan here in April. And I just wanted to get your thoughts on this, and if you think this is going to be significant in where we are going to see, and who's going to be in charge of pricing metals going forward.
Absolutely. I mean, that whole development is part of the bigger picture of what's been going on with gold for the last while, and especially, I would say, during the bear market, which is that, so when gold had its bull run, up to 2011, a lot of money in the West flowed into gold ETFs. So instead of people owning physical gold, they owned it through an ETF exposure. And then, of course, when the market turned, that exacerbated the downside for gold because ETFs were liquidating the metal. So that's sort of how things worked in the West. In the East, however, owning gold has long been a tradition. That's what people do as a mainstay for holding wealth. And so the whole idea of pricing gold in Shanghai and the movement of physicals from West to East is legitimately happening. It is going to become, the way that we think about gold, the way that we value gold, I think is changing. And I don't know when, maybe, 10 years from now, who knows? Maybe instead of checking the London price, maybe we will equally or predominantly check the Shanghai price. I'm not sure. At the end of the day, what matters is how much gold is being bought. And that is an amount that's increasing right now in the West, again, because of all broad economic uncertainty, currency uncertainty, interest rate uncertainty, central bank uncertainty. So that's increasing in the West, and it's continuing in the East. So,
is
in
China,
the big picture,
I was going to say, is China preparing for something bigger? And, they own a lot of U.S. treasuries. And if we did see some major catastrophic event happen, they would be very much impacted by this because they still own a large portion of their reserves in treasuries. So, would you say that they're preparing for something by continuing to import large amounts of gold?
There's perhaps, I don't think that they're necessarily preparing for a catastrophic event. I think what they are is broadly strengthening their position. So instead of just or predominantly holding U.S. treasuries, which, as you said, they certainly still hold a lot of, they are gradually trying to lower that position, and they're buying gold. We don't know how much they're buying. When they gave their gold holding update, whatever it was, 6-8 months ago, believe it if you want or don't. I don't. I think the China owns a lot more gold than they say they do. Why do they own it? For a couple reasons. to diversify their asset base, which is just generally a strong move to do, to back their currency as a legitimate alternative to the U.S. dollar as a global currency, and to, yes, diversify themselves away from the risk of some sort of catastrophic event economically in the West. So, yeah, it's absolutely a central tenet of what they're doing. Is it specifically aimed at, catastrophe? No, but it's part of the big picture for China.
Gwen, when it comes to what we've been seeing over the last month or so, we've kind of seen precious metals action stall out here somewhat. The mining shares kind of stall out. I mean, there was a big run up, of course. And, so I guess I just want to get your thoughts on what we are seeing in the current junior market, the mining market, and precious metals as a whole, as a result of, markets potentially stabilizing and things appearing to normalize.
Yeah, absolutely. I mean, to me, this phase where the gold price is moving sideways and gold miners, look at the GDXJ, something like that, is predominantly moving sideways. To me, this is a good thing. The run-up that happened in January and February was very exciting, but of course you can't maintain that kind of move. You have to consolidate at some point. When the move happened, people were crying out for a correction because it was such a quick move up in the price of the yellow metal. I would say what's happening now with this sideways movement is that gold is correcting through time rather than through price. It didn't need to fall back in price to correct. What it's doing is correcting by holding its ground, proving that the move was legitimate, and just moving sideways and consolidating, I would say in preparation for another leg up. When that leg will happen, I think, depends predominantly on the Federal Reserve. We've got another big decision coming up in June, and so in general, I think that gold is going to move pretty much sideways through April. I think this consolidation pattern is just going to continue. Thankfully, the miners are just holding their ground, as is the yellow metal. So this is actually to me, this is a sign of strength that this is a new bull market happening. What's also interesting is if gold does move up again after this consolidation phase, that would be gold gaining through the summer. Now, gold and gold equities never gain in the summer. Literally, if you go back over decades, the summer doldrums are a very well-established phenomenon, except there's one exception, and that is that gold gains and gold equities gain through the summer at the beginning of a new bull market. So if gold does, come September, if gold is higher and the GDX is higher than it is right now, then that I would take as confirmation that this is a new bull market. I mean, I think it is already, but that would sort of be one sort of final bit of confirmation.
Yeah, I'll definitely be looking for what we see in the summer here. What about the companies specifically? Are we seeing companies start to act like we're in a bull market with more confidence and more, taking steps that would indicate that the future is going to be brighter than the past?
I would say we are. And I mean, I think everybody is still cautious, but what's the big change is that companies are able to raise money. Good companies with, well-connected management and good share structures are able to raise money, and good projects are able to raise money right now. They have been sort of in January, February, and March. And money means that companies can be active again, and active companies put out news, and the market can react to news, so the whole cycle has some energy in it. So that's the big change. Now, the other side of it is that there's a lot of companies out there that are really looking for acquisitions, and how much of that comes through in the news, in terms of actual deals consummated and news announcements, is one side of it. The other side of it is just talking to people in the industry. And honestly, the main conversation that you have these days with mining folks is who's trying to buy what and how they were getting outbid for it. So there's a huge amount of activity going on behind the scenes with either, private management teams or public management teams negotiating to try and get assets while we are still fairly close to the bottom before things get more expensive. So I would say I've definitely seen a change in the outlook from the operators in the industry that it's time to move now, because if you wait for too long, you'll miss some of the opportunities.
So we know of a few companies that are doing just that, getting out there, making acquisitions, pennies on the dollar, and it's been very beneficial during the bear market when things were so depressed. And one of our favorite companies over here at Crush the Street is First Mining Finance, headed up by Keith Neumeyer. And I'm wondering if we do see a turnaround with precious metals, if this is going to slow down their ability to continue to acquire, or if the bear market for a company like that is better, or if it's good either way because they're positioned so well.
Yeah, those are good questions. So I would say when you talk to Keith and his team, they would prefer that the bear market continue for a bit longer. So yes, in terms of acting on their business plan, which is to acquire a big portfolio of assets before they get expensive, they wish they had a bit more time, and they were aware that the clock is ticking because the bear market is ending or over. That being said, they have already made some very good acquisitions, and the next step matters as well. So the concept is to create the portfolio and then have the portfolio gain in value because the market improves. So the next step is just as important as the first step. What they're doing is a really interesting model, and I think it's something that comes up in conversation with people in the sector a lot. When you look at their share price hasn't moved up that much, but their market capitalization absolutely has, and that's because they're using share capital to acquire assets. And and the process that they're using there just means that the number of ounces or gold equivalent ounces per share in their company keeps growing. So I think people really like to focus on, or really like to sort of hit out against particular aspects of companies and claim that they're bad. So people don't like large share counts, and that's a legitimate concern. People don't like promotion, which is a debatable topic. But promotion creates share price movement. Share price movement enables you to use share capital to buy new assets. So Keith and his team know that equation really well, and they're doing a good job of taking advantage of that to establish this portfolio. And if the market goes a little sooner, like before they're totally done, well, they've already got some good assets. So I think they're pretty well positioned.
Well, Keith has definitely found an equation for success. He's had great success with First Quantum Minerals, one of the largest copper producers, and founder of First Majestic Silver, one of the largest primary silver producers. And he's on to his latest venture, First Mining Finance, which is acquiring projects and ounces in the ground for pennies on the dollar. And the opportunity to partner with a guy like this on his next venture, I mean, this is it. So, Gwen, switching over into some of the other metals, we have seen rise in metals prices in industrial metals as well. And I wanted to get your thoughts on what we're seeing here. Is it a result to the stock market going up, oil going up, or just an overall kind of release of what we were seeing with the chaos in January? If we would have gone into a situation where we would have continued falling, I would say that these industrial metals would have been continued to suffer. But for whatever reason, we've been stable here, and they've rebounded, along with gold and silver to a certain degree. So your thoughts here?
Yeah, I think there's maybe two things going on. One is that there really is a basement price for a lot of these industrial metals. Like copper makes our world work. And, copper prices can only go so low before we risk not having access to this essential metal. I mean, it electrifies our world. So there is sort of a basement, and I think we had reached that basement and bounced off of it to a certain degree. And then, when gold moved in January and people got and that attracted some renewed interest into metals and mining, that absolutely helped the base metals as well. Not as much as gold because it doesn't have the safe haven aspect to it, but it does have the value aspect. So we're finishing a very long bull market in American equities. So a lot of things there, there's all kinds of debate about American equities being overvalued and where you can find value. Well, investors who do believe that the S&P has topped and that U.S. equities have topped, they're looking elsewhere to find value. Where's a good place to find value? Well, how about looking in the commodity space where things have been on the decline, where they completely missed the bull market party, and they've been on the decline for 5 years instead. So I think it's that sort of generalist rotation into a sector that offers value, whether that value is going to really, rise up tomorrow or whether it's going to take another couple months or years, in the case of some base metals. The generalist investor is fairly aware that commodities are at a bottom, and I think oil's crash and partial rebound only reminds people of that even more, right? People saw oil go down so low, and it has since rebounded 50%. That's a reminder that commodities do rebound because our world depends on them. So I think it's that search for value that's really been helping the base metals.
Gwen, most people got into investing in mining stocks really probably over the last few years, especially after the '08 crisis. A lot of alternative media has been able to shed some light on the value that there is with the precious metals. And, I guess what I want to ask you is, what can we expect the bull market to look like? What have we seen historically with a bull market? And how long could the bull market last? I mean, and I guess if we see precious metals or the juniors go up 100%, I mean, should we expect that to be the end? Or how can we expect this to play out? And I know it's impossible to know specifics, but what would you be looking for the tendencies of the bull market to look like?
That's a good question for sure. There's a couple characteristics of bull markets. One is duration. They're fairly consistent in their duration, they range from, they usually average around sort of the 4 or 5 year mark it usually captures the heart of a metals bull market. Within that, you usually get individual commodities that go on particular spikes. So like during the last bull market, we had the rare earth metals that went on a spike. And that phenomenon crested and troughed before the rest of the market. But you have these players within the bigger market that sort of go on their own runs and then come back down. Uranium made a similar move. In terms of how to keep tabs on whether the bull market still has legs, one thing you want to watch is a bull market is defined as higher highs and higher lows. So nothing ever rises without stops. There are always setbacks during the summer, seasonality, whatever it might be. But the lows have to be higher than the previous, significant low. And then you also want to, don't limit yourself by thinking, okay, my junior miner has doubled, that's got to be the end. Because no, mining equities can produce ridiculous returns, like incredible returns. There are stories, 10 baggers are not uncommon in a mining bull run if you get in fairly early and, manage to hold on. So there's no rule of thumb there. What there is a bit of a progression where usually the first to go are those that produce. These days, that's going to actually be the mid-tier producers who are moving first. The majors are still somewhat burdened by debt loads, and that's holding them back from performance a bit here, share price performance. But the mid-tier miners who are sort of leveraged, who have the best leverage to the price of gold, are moving first. Then, as their share prices perform, funds and investors can sell on some of the gains from there and move their money down into the next tier of companies, which are sort of the development assets or the later stage explorers. So then that group starts to go, and then at some point, again, the money slows down again and starts to lift the early stage explorers. So once you start to see early stage exploration companies really getting some share price action, then you know that we're right in the heart of the bull market. How long that lasts very much depends on all kinds of global economic factors, but there is that progression. You want to see the higher highs and the higher lows. You want to watch sort of time frame and don't get too caught up in any, individual or unique element that manages to go on a run. You can probably make some money on that, like lithium right now, but don't expect that to be completely in sync with the broad bull market.
You know what? I think it's important for people to talk this out and to kind of set some goals ahead of time when they're investing in the precious metals, because in the moment when you're looking at your trading account, you watch it go up 5%. It's so easy to sell, just because you got a profit. I mean, just a tad bit. I mean, if you invested 10 grand and you've made $500, people are very...
It feels good.
Yeah, it feels good, and you're ready to take your profits. So, but I think it's important to be able to talk this out and to kind of have a game plan as to what to expect and how to play it. But with that, Gwen, I wanted to ask you: do you have any events coming up and important announcements to make that you want to share with our audience?
Absolutely. Thanks for asking. So on May 14th and 15th in Vancouver, I'm co-hosting the third iteration of a conference that I put on. I put it on alongside Eric Coffin and Brent Cook and Brian Lundeen, so fellow newsletter writers like myself who are subscriber-supported newsletters. And so what we do is we invite our subscribers, followers, people who listen to the things that we say, to come and spend the weekend listening to presentations from ourselves and from the companies that we like the best. So these are companies that each of us have individually recommended to our subscribers and own ourselves. So they're sort of our top pick companies, and we want to give our subscribers and followers good access to those management teams and those stories, and just a good weekend where we can all talk metals and trade ideas. We've done 2 of these conferences before. They've gone really well. It's a really good way to figure out what's the most, to get a look at what we call a vetted list of companies. Like I say, these are companies that have earned recommendations from one of us newsletter writers. So it's not just any company can come. They have to have earned that spot. And it's a fantastic event. So it's called the Metals Investor Forum. So if you're interested, you can sign up at metalsinvestorforum.com. And that's May 14th and 15th in Vancouver.
Awesome. And any information that you'd like to share about your home website?
Sure, right. So I write a subscriber-supported newsletter. It's called Resource Maven. The website is resourcemaven.ca. It comes out once a week. It's what I'm buying, what I'm selling, and what I'm thinking about metals and mining. If you're interested, you can sign up for a free trial on the website. It comes out once a week, and I try to make sense of this crazy market.
Yeah, no, and I'm glad you were able to come on and talk some sense to me today and kind of make some sense of what's going on in these markets. So I do appreciate it. The audience appreciates it. Gwen Preston, everyone, be sure to check out her conference coming up and visit it, sign up for it. And Gwen, thanks so much for coming on the show with me.
Thank you for the opportunity.